Welcome to How Inflation Destroys Stock Investors but Helps Real Estate Investors. Do you feel like no matter how much money you save, it just doesn't go as far as it used to? You're not imagining it. It's inflation. There was a time when kids could go to a 5 and dime and buy candy for a penny apiece. As a kid in the 1960s, we had a corner store where I could buy an ice cream cone for just 25 cents. Those were the days. Inflation is a hidden force that is quietly eating away at your savings and your retirement accounts. In this video, I'm going to show you exactly how inflation destroys paper assets like stocks and savings accounts over time, and why real estate has historically been one of the best ways to keep pace with inflation and actually protects your financial future. Let me ask you a question. If you lived to 90, 95, or 100 years old, will your money last as long as you do? What would you do if you lived 15, 20, or more years in retirement, but your savings only lasted 10 or 15 years? People are living longer. A man 65 years old today in relatively good health has better than a 50% chance to living to 90 years old. And women live longer than men. They could easily live to 95 years old or longer. As a certified financial planner and real estate broker for over 40 years, I've seen too many people go broke in their golden years and have to sell their homes. I have seen people forced to go back to work in their 80s and 90s. I have seen too many people that thought they were doing everything right. They followed other people's advice. They put their money in the stock market only to find out too late that they don't have enough to retire. Inflation is a silent killer for paper asset investors, living too long with too little. I want to help you retire and not outlive your savings. If you're new to this channel, I'd like to tell you a little bit about myself. I'm Jeff Seibel, certified financial planner, real estate broker, and advisor with over 40 years of financial planning and real estate experience, and the creator of the Wealth Agent Certification Program. Let's start with something simple. A postage stamp years ago was just 4 cents. Think about how much a postage stamp costs today. This is a great example of inflation that everyone can relate to. Let me show you how inflation works. If prices rise at only 5% a year, a very realistic rate, here's what a postage stamp would cost in 2063. I'm not going to go into detail about the real inflation rate, but reliable and independent sources say it's at least 5% or more. What if you took your money and stuffed it under your mattress? Or more realistically, you put it in the bank, in a savings account, or purchase CDs or bonds. Even if the account increases with some interest income, what happens to the purchasing power value of paper assets over time? Let me show you. Take a look at this illustration. If you just let your money sit under your mattress in a bank account, purchase CDs or bonds with a 5% inflation rate, and you started with $100,000, in 15 years it lost over half its value. And after 25 years, it would only have the purchasing power value of $27,000 and change. Now you still have the $100,000, but the purchasing power value of that $100,000 is worth much less over time. Each and every year, inflation shrinks the purchasing power value of your money and the purchasing power value of all paper assets like cash, CDs, stocks, and bonds. Now let's talk about what it takes to maintain the purchasing power value of your money and your investments. $100,000 today can purchase $100,000 of goods and services. But in 15 years from now, with a 5% inflation rate, that same $100,000 needs to increase to over $207,000 in change just to maintain purchasing power. And after 25 years, it needs to increase to over $338,000 and change only to maintain purchasing power. So that means $100,000 needs to increase to $338,000 and change after 25 years just to maintain purchasing power at a 5% inflation rate. Inflation destroys stock investors in many ways. First, when saving for retirement, and then in retirement when they are trying to live on a stock portfolio, because inflation forces them to liquidate more and more of their savings in retirement to pay their bills. For those just joining this channel, let's talk about the hidden truth. The stock market's actual long-term returns are much lower than most investors think. If we go back to 1900, before and after every good stock market period, there's a bad stock market period. And I call this the seesaw effect. And as history has shown us, we're probably on the edge of a bad stock market period that could force many stock investors to delay retirement. Low historical stock market returns combined with inflation makes it nearly impossible for most stock investors to be able to retire when they want and the way they want. What I'm about to show you is proof since 1900 that 10 out of 11 generations of stock investors failed to be able to retire. Assuming a 5% inflation rate, highlighted in yellow are the after-inflation compound returns. The returns in red, with a minus sign in front, show the periods where stock investors lost purchasing power after 25 years. Please notice the most recent 25-year period. If the inflation rate was 5% and the stock market only increased by a little over 5% after 25 years, then stock investors had no real increase in the purchasing power value of their stock account. This is heartbreaking because too many people entering retirement think they'll be secure, only to find themselves with less money than they needed and to live the life that they worked so hard for. Now let's talk about real estate. This is where real estate really shines. Unlike paper assets, real estate protects you from inflation. What are houses and apartment buildings made of? They're made of bricks, concrete, copper, lumber, tile, vinyl, roofing, and the list goes on and on. Inflation increases the price of real estate because of the increase in the cost of goods and services to create it. So when you look at a house, think of all the things that go into making it. Please look at the increases in the value of the median U.S. home by decade. Then look at the compound annual growth rates in yellow. Think of the compound annual growth rate as a measure of inflation. The median home price was $2,938 in the U.S. in 1940, and 80 years later, the median home value was $329,000. That is about 112 times more. This means that real estate increased at an inflation rate of over 6%. If you own rental property, your rental income increases with inflation over time. It goes up and up, which maintains purchasing power and your lifestyle in retirement. For example, if the median price home in 1960 was worth $11,900 and the assumed annual net rental income percentage rate is 5%, then just one house provided $595 of annual net rental income. Then if you retired 30 years later, a $79,100 rental would provide $3,995 of annual net rental income. And on the last year of retirement, 30 years later, the annual net rental income is estimated to be about $16,000 and change. Buying just one house or investment property is about creating a lifelong income stream that increases and protects you in retirement. So here is the big takeaway. Inflation is real, it is relentless, and it is destroying paper wealth every single day. Real estate has proven time and time again to be one of the safest and smartest ways to keep pace with inflation. If you're a real estate agent ready to level up your business, boost your income, and stand out as a true professional, it's time to become a certified wealth agent. Take our certified wealth agent training and get your new designation at wealthagent.com and become part of a movement of elite professionals showing clients how to retire early with less money invested. Don't just sell real estate, transform lives and dominate your market. If you would like to find out how to retire early with less money invested through real estate, or would like a second opinion on your current retirement plan? We're here to help. Visit wealthagent.com to schedule your complimentary consultation today. Dream bigger, retire sooner. Your new path begins now. Please go to wealthagent.com to learn more. And thank you for watching. I'll see you in the next video.